Good morning, traders. Today is Thursday, the 4th of November. My name is Neville Hornsey, market analyst of YouTrading, and today I'll be talking about the US dollar versus the Japanese yen. So as always, I'm going to start with the YouTrading.com Forex heat map. You can see here that the US dollar is pretty strong across the board, only weaker against the Chinese yuan. And then you've got the yen underneath it, which is also pretty strong. But obviously the dollar is beating the yen at the moment. Also, the Swiss franc is doing better than the yen. So we're going to quickly look over to active trader. Look to the left-hand side. And the reason why I'm looking at the US dollar versus the yen is because obviously we've seen some moves in the market, but also 82% of traders on this platform are bearish. So only 18% are bullish. And we seem to be in an up move. If you look to the right-hand side on the daily chart, the 20, the 50, and the 200 period moving averages are all pointing upwards, and we've obviously got some sort of pattern going on from a breakout of this period here. If I quickly go to this chart, you can see that from 2021, most of the activity has been in between 31st of March to the 21st of September. This is like where you can see the sort of bell curve sort of peaks out. So this is like a volume profile, but in terms of volume, there's no centralized actual exchange for the yen and the dollar. So I'm just going to use this as an activity monitor. And most of the activity has taken place in this range between, if we go back to active trader, between 111.50 down to 107.70. So this area here is where most of the activity, as you can see, most of the volume has been sort of traded in 2021, and we had a big breakout. Obviously, we had this little fake out here in July, and then we had the actual real breakout, retest, and continuation higher. So while all of these traders are bearish, I want to be seeing if I can get them stopped out. No offense to those traders, but it seems to be a good contrarian way of trading. Right, what sort of pattern we're going to look for? Essentially, I think the price action is creating a bull flag. Now you need to see the security has made a strong move up on high relative volume, forming the pole. So we had this breakout, retest, continuation higher. And if I just pull up the volume on active trader, you can see that the activity really started to build up from this fake out here in July, and then really started to ramp up, to get this breakout, retest, continuation going. You can see like the activity in the volume indicator has really picked up compared to what it was at the start of the year. So yeah, good volume on the rise up. We've consolidated near the top of the pole on lighter volume. Well, volume has started to come off a little bit. It's still relatively high, but it's not pushing higher. So people are starting to wonder whether or not to take shorts, as we see in the sentiment indicator, but relatively high and dropping. This is a daily, so disregard the volume on this candle here. When it does break out of the consolidation pattern, you want to see more relative volume to come into the market. So you want to see this volume be up here at the end of the day. You don't want to see it trailing down here. That would sort of signify that the breakout was on weak volume, and we're likely to get another one of these sort of fake outs. So that's what we're looking for. We're looking for a bull flag breakout to the upside. Obviously, I've got two different ways of drawing it. You can go sideways, or you can sort of consolidate and slightly dip down. That's when we say the descending channels break to the upside. It's basically a bull flag breakout. What we do need to do, obviously, is put some sort of context on this chart. So you can either take the actual closes, or you can take the extremes. So if we take the extremes and just put a really big, thick red line on it so you can see it, we want to see a breakout of this swing high here from the 1st of November, and then a continuation above this swing high from the 20th of October on good volume. And the aggressive breakout will happen. We might get a retest and confirmation of this old resistance acting as support before the continuation higher again. So that's what we're looking for. In terms of Elliott wave theory, kind of looking for 5 waves up. So you've got one up, then a pullback, and then this is this third wave obviously longer than the first, so that confirms Elliott wave theory. This was a correction in price, whereas this is looking like a correction in time. So another confirmation of Elliott wave theory. So I'm definitely looking for one more impulsive move to the upside. 115 seems a bit close, so maybe we'll go to 116. So that's what we're looking for. The catalyst, obviously we had FOMC meeting last night and they delivered their statement, and then Fed Chair Powell delivered his press conference, answered all the questions, tried to avoid talking about raising rates. It's all about the taper. And if we go to this chart again, the orange line here is the 2-year yields. So that's the bills and notes here rising. We had a big spike up in June when the Fed got really hawkish. And then again in September, after we had Jackson Hole, the FOMC meeting there sort of confirmed that the Fed were definitely thinking about tapering in November, which they confirmed. So this was all pricing in a Fed taper. The blue line is the US dollar index. Again, if we look to June the 16th, big push up in the dollar, and that's continued higher. And that's basically sort of held the dollar yen in this consolidation period here. But as the dollar broke higher, as the yields broke higher, then that gave the dollar enough impetus against the yen to actually break up. And we're kind of seeing the dollar and the yen sort of following now the sort of track of the dollar index and the US 2-year yields. So what does that all mean? Fed Chair Powell, obviously would like to get inflation down, and the market thinks raising rates would be the way forward. So raising the 2-year yield here would be the outcome. But he needs to see basically the Fed's got two mandates, or two parts of the mandate. One is price stability, so that's the inflation side. And then there's the job creation, maximum employment. So if we go to here, I track certain things. I track US fiscal flows, I track NFP, public debt issues and things like that. And in terms of jobs, we want the NFP. Well, according to Fed Chair Powell, we want to see NFPs coming in around 550K to 600K. The more they do that, the quicker the US will get back to maximum employment. And if we just look down here, pre-pandemic, so before 2019 and 2020, 168 was the sort of medium NFP number. These are the averages of the fiscal years, 16, 17, that's 2016, 2017 fiscal year. So the averages were around, say, 200,000. Then obviously we had the pandemic, and that average, went almost down to 1 million losses. But obviously we've had a pickup over the last fiscal year, which is just sort of closed at the end of September. And the sort of average of that fiscal year was 474. So we want to see a pickup in the average for 21-22 fiscal year. And Fed Chair Powell last night in his press conference said they're kind of looking for 550 to 600K on average per month to get to the 2022 raising rates. Obviously, if we go back down to, these averages, say 200K a month, then that's going to take the job market a lot longer to get back to full employment, as they will try and decipher. And that means they won't raise rates. So there is a possibility that the market may have got ahead of itself. So there is a possibility that the market's priced in a rate hike for 2022 and it just doesn't happen, in which case the yields would come back down. And then depending on other factors, if this dollar index also comes down, then maybe we start to see the dollar yen also come down as well. But at the moment, it's a risk on sort of trade. So yen isn't required, that's a safe haven. So the dollar yen has that as well on its side for the upside. And I'm basically just sort of waiting really for these traders, the 82% that are short, to get stopped out. And like I said, I think we've got one more impulsive wave to the upside, and we'll be trading the classic bull flag breakout. Whether or not we get second chance, to sort of get back in at a retest and confirmation of this breakout level. I don't know. We might just get a full send to the upside. The only other sort of target I can think of putting on the chart is a Fibonacci extension. So if we were to go from this low to this high, taking that pullback, that takes us to 115.50 and the 261. I mean, if you go past the 161% or 162% extension, you can actually start to look for a full 400% extension. So maximum projection 123, but that's a long way off. Maybe just target 115, like a good 100 pips higher, with a possibility of getting it to the 118. Right, that's probably it for now. Today is Bank of England, so we're going to get some movement in the pound versus US dollar. That might affect this dollar yen, and then NFP tomorrow. So yeah, take care, good luck, and I'll speak to you tomorrow.